Hello, good morning and welcome. You are watching the Mining Outlook Show, brought to you by Wardle Armstrong, and I'm Charlie Gibson. And on today, this morning, the very first day of Mines and Money, London's, what could we call it, well, flagship mining show, which is starting today. We are asking the question, what do you want to look out for in a mining stock as we approach 2018? And to help me answer that question, I have the Managing Director of Wardle Armstrong International, Phil Newall. Phil, very good morning. Thank you very much indeed for joining us. And we also have the partner, or one of the partners, I should say, at SP Angel, John Meyer. John, very good morning. Thank you very much indeed for joining us. So here we have this big question, 2018, lots of ideas, lots of themes, lots of thoughts, lots of ways we could tackle this. But I suppose, John, let me come to you first, if I may. From your stockbroking perspective, what are the big picture themes that you think we should be playing?
Well, I think first off, let's just say the first thing you look for in any company is always quality of management before anything else. But the big theme for mining is electric vehicles, commodities to feed those electric vehicles and the production and the associated infrastructure to go with all of that. And I would say industrial minerals. The market has broadened out to include investment in a diverse range of industrial minerals now. And I think that's very much tied in with the whole drive to electric vehicles, electrification of just about everything that we're doing. And I think that's really where investors should start to look for their focus. Slightly away from some of the traditional commodities that investors went into. So it's a broadening out of where people's interests are. Copper is clearly a big focus and of course is a centerpiece of that electrification strategy. But there are other commodities such as lithium, cobalt, titanium, for example, titanium mineral sands, that come into that strategy. So I think as we discuss this, some of those will come out.
So nickels, presumably copper, you mentioned. Vanadium? I mean, it's not electrification of vehicles, but it is the sort of electrification theme, isn't it?
Well, exactly. Vanadium is a very good metal to pick up on because vanadium redox batteries are likely to gain greater prominence for battery storage, particularly for grid battery storage. So when the wind's not blowing and the sun's not shining, you need to store that power somewhere. And of course that power then needs to be transferred with copper cables to electric vehicles, and a lot of the weight of a battery in an electric vehicle is the nickel in that. So you're absolutely right to pick up on nickel as a key metal going forward.
And I suppose graphite as well as for one of the electrodes.
Yeah, graphite or graphene improves almost everything it touches, and graphite is an important part of the electrode. So yes, it's another good example of a strategy of diversification into these industrial commodities.
So for you, it's everything new, if you like, in mining, rather unusually, because that's not a theme I think that mining plays very often. Phil, I hear you chuckling there.
Yes.
So is it everything new from your perspective as well?
I'm probably a little bit more jaundiced about the whole battery EV move, if you like. I mean, certainly there is going to be huge demand for the metals we discussed earlier, and also throw cobalt into the mix. And I mean, cobalt is particularly interesting because that's one that doesn't form native deposits. So cobalt tends to come as a byproduct from other things such as copper. So very recently as consultants, we've seen a whole bunch of inquiries from clients saying, well, have you seen access to a good cobalt project recently? And you explain, literally, it is as a byproduct. It is a problem because trying to secure good sources of cobalt globally is going to be a major issue moving forward. Just taking up on what John said about, if you like, his picks for metals moving forward, I'd still throw in the traditional metals, the gold, the copper. I agree with you, nickel I think still has a strong future. I mean, iron ore, that's an interesting one, isn't it? Everybody said it was going to go whizzing back down to $40 a tonne. It's sitting there pretty stubbornly at 60 odd. Is it going to take another dive down, or is it going to stay where it is?
Or is it going to confound everyone again? Because it has been the arch confounder, hasn't it, of the analysts?
But the markets we're in a very different place to where we were during the last boom. And I'm personally sure we are on the next, we are in a bullish cycle at the moment. Where we're at on that cycle, I'm not entirely sure. But I'm more confused about what that cycle is going to look like. Because historically we had the huge Chinese boom of double-digit growth. If you like, those days are gone. I don't think anybody realistically expects those to come back. China's now sitting on, 6, 7, 8% growth, or whatever those numbers are to be believed. And that's going to create a new norm for us all. So what are we in now? Are we in a new normal cycle where metals are just inherently creeping upwards, certainly those which we've identified here as having, if you like, the main uses industrially, and maybe with no significant drop-off moving forward? Because the fundamental thing about all of this is they are running out, and people are struggling to find new sources of them.
John, would you agree with that? We're in a sort of, what does that sound? That sounds like a truncated cycle. You know, it used to be very dramatic, and now it's just
I'd almost get away from the word cycle. I think I just think we're in a different ballgame. Totally.
We're in a post-cyclical world. Is that possible?
I have no idea.
I think it's important to point out that mathematically, high single-digit growth in China is still going to suck in huge demand for metal, huge new demand for metals. So yes, of course, we're out of the double-digit growth that we saw, but China is a much bigger economy now, and as it drives into a sort of new era of, particularly with electrification. For example, there's over 20 million electric bicycles in China already. It's a staggering number.
Phenomenal.
And of course, they love upgrading these things in the way that we saw in Japan many years ago. So they're always looking for the next new product to come through, and they're chucking the old ones away. Now, and I think that this is going to continue to drive the demand for these new metals. Also, at the same time, they're cleaning their act up, and iron ore is a very good example of this. So poor quality iron ore is not getting much interest anymore. So it's all about quality of raw materials, quality of feedstocks, and then quality of metals coming out. So the Chinese are insisting that the metal rebar used in their construction now has the proper amount of vanadium in it, whereas they used to get away with putting very little vanadium into their rebar. Now they're having to double, treble, quadruple the amounts that they're putting in just to meet the standards, and this is driving demand very strongly. And it's not just vanadium, but it's nickel for stainless steel, and a whole range of other metals, and the quality of the iron ore that's going into the blast furnaces again has to be very good, very much greater in grade, very much better in quality.
That's an interesting concept there, isn't it? Because I mean, we saw, if you look last year, and the one mineral I think we haven't touched on yet is coal. There was an extraordinary spike last year when the Chinese said they were going to restrict supply domestically, and you saw the price of metallurgical coal disappear through the roof, and it's come back down some way, but nothing like to the levels that it was at. That can actually generate its own cycles, can't it, Phil?
I would say yes. I mean, the coal picture is fascinating because there is so much pressure globally from if you like, from the green lobby that coal is a fuel of the past, and it's almost you shouldn't go near it. But clearly there will be significant parts of the world which for long beyond our lifetimes will be entirely reliant on coal. And it's so easy for in this new age we move through to, you know, when you plug your phone into your socket in the wall and you're assuming you're getting some nice green renewable energy, well, a fair degree of that energy has to come from coal. Now, whether we go, I think it has to be clean coal technology in some shape or form, but there are just huge areas of the globe where this is going to be vitally important for many, many years to come. And it's, again, going back, if you're like talking about stocks to look forward to, it's picking those companies and stocks which are targeting those specific areas, and that's really more John's domain than mine.
Speaking of metals of the past, metals of the future, and let's get on to stocks in a minute, but metals of the past, metals of the future, another one we haven't mentioned, uranium. Which is it? Is it a metal of the past, or is it a metal of the future? Any thoughts?
Well, I don't see a lot of new nuclear plants being built in Europe right now. The lobby is too strong against it, although we have got something planned in the UK. China has been building a lot. They're very quiet on that front. So we're not seeing much news flow in pickup in demand. The Japanese should be turning these things back on after the Fukushima incident, but unfortunately the demand seems to be decreasing, which is suggesting that this isn't happening as quickly as perhaps people had thought. And we've just seen the world's, I think, largest uranium mine put on care and maintenance for a while. So a bit of a problem in that. And I think nation states are generally preferring to go into renewable energy and perhaps even clean up some of their coal-fired power stations. And I support Michael Bloomberg's action in litigating against dirty emissions from coal-fired power stations. There's no excuse for not cleaning these things up. It's not that expensive to retrofit clean coal technology to power stations. So they really ought to get on and stop wasting time at conferences. Just go and do it.
One more metal that we must discuss, because it does account for probably about half, I think, of all the juniors are out there, are gold. It's often seen as the flagship, it's the standard bearer for the industry to some extent, and whatever sentiment is around gold, then it drives sentiment in the industry to some extent. What are your thoughts on that? John, I'll come to you first.
I think on gold, look, it's always out there, but we are heading into a higher inflationary environment, so investors are going to like that, and it is likely to create its own momentum going forwards.
Okay, but by the sounds of it, a little bit more muted in your opinion than some of the excitement you might get in the sort of the EV, the electrification story.
Yes, perfect. Personally, I prefer copper and the new metals coming through.
Phil, does that dovetail with your thoughts?
Not quite, and I say that from the if you like, the investors who are coming to us to find projects for them or to have projects recommended, and still gold takes the flavour there. It's copper, gold, zinc, I'd guess in that sort of order. Gold projects, I think the big advantage of those from an investor standpoint is that they are if you pick the right one, they can be very low capex, and also they can be brought into production relatively quickly, and that's a big advantage over many other commodities we're talking about. Also, some of the newer metals, if you like, the technologies are a little more, at this stage, more unknown. They're certainly more expensive, and I think from an investor risk standpoint, I think gold's here for it's here for the long term. And as John said at the beginning, you know, it's a banker. It's been around forever, and it will continue to be around forever. But the big issue there again is that, because of the hiatus in exploration over the last sort of 10 years, exploration trends trending downwards, companies just are not finding the resources to continue to boost their coffers, and that again in time should kick that gold price up. And it's the age-old question, isn't it? If we could say when that price hike's going to be, we'd all be very wealthy people. But
still a bit of inflation coming through into the system would not be a bad thing as far as gold is concerned.
Not at all.
I keep saying this, and I keep saying, you know, the one metal or mineral that we haven't mentioned is such and such, and then we talk about it, and of course then I think of another one. So the other one I just thought about is rare earths, and have you sort of touched on, I mean, you said you saw in terms of companies recommending projects, bringing projects to you, there's interest in gold. What about rare earths?
There is also interest in rare earths. Again, it's the investors coming to us saying, have you come across good rare earth projects recently? Now, there are projects out there outside of China, which of course produces the majority of global rare earths. We tend to advise our clients, unless they have very deep pockets, to stay away from rare earth metals. There are a whole bunch of issues with exploiting successfully and marketing rare earths, and it's not something we would advise our clients to get into unless they find a world-class deposit. But as John can tell you more about the markets of rare earths, it's a special beast in its own right.
John, give us your thoughts on rare earths. Are there any opportunities you see out there?
Well, what I can tell you is that there are a whole series of traders out there who are very, very keen to buy into rare earths, and I think that's as much as we need to know.
Okay. There's several. I mean, we started off actually talking about management. We said good management is essential. We then talked about a lot of metals and minerals, and we have diverging opinions sometimes. But I think, broadly speaking, we're positive. We're cautiously optimistic. Would that be a reasonable summary, do you think? Cautiously optimistic? Or are we more optimistic?
I'm probably
than that?
more optimistic.
You're more optimistic. John, are you more optimistic than
I'm
cautious?
definitely more optimistic. I mean, this feels like the start of the super cycle that we had when China bust its way into global markets after the Asian crisis. This is actually more exciting than that, because the whole electrification thing with the electric vehicles, though the new electric vehicles consume just about every metal in much greater quantities than we've seen before in anything else. So it is a huge trend, and I think it's going to drive metals for some years to come.
Okay, so we're quite optimistic then.
Absolutely.
Quite optimistic?
Agreed.
We're quite optimistic. We may even be more optimistic than quite optimistic. Another thing, we talk about, what to look for in mining investments. Obviously, sovereign risk is a big issue. Is that a theme in investment? Are there particular areas of the world that we should be looking at, and particular areas of the world that we should be avoiding, in your opinion? John, I'll start with you.
It's very difficult to judge sovereign risk. Many difficult countries actually are very supportive of mining because they appreciate the financial benefits of it, and actually the job creation, the industry creation that goes on around those projects. And I saw a huge example of this in Azerbaijan recently, where the new mine had just totally transformed the region, not just the local village, but everything else around it. So most countries actually allow the miners to get on with the job and are very supportive. But I mean, there are some areas to avoid. Clearly, North Korea is not somewhere we would go to in a hurry. It's difficult to finance. You wouldn't really want to finance anything in China from here either. But most other parts of the world are absolutely fine.
But Phil, I was going to say, what are you finding? Because where are you finding? One of the areas that can be quite strong, I think, for investors is where a country is changing its mining code, and specifically, and John touched on it, is specifically trying to attract mining. And you mentioned Georgia there, and there's quite a theme in the Caucasus, I think, of countries, that are suddenly wanting to develop these projects that they've maybe known about for some time, maybe since the old days. I think you're very strong in the former Soviet Union as Wardle Armstrong, aren't you?
I mean, we see that theme throughout Central Asia, and I'd call it Eastern Europe side, and particularly now areas like the Caucasus and the Balkans. I think a lot of investors are seeing those to be effectively European. I'll use that in inverted commas, and particularly what's been happening in Africa recently, with countries like Tanzania having various sovereign issues in terms of trying to sort out their mining codes, etc. And I think that's given an opportunity now to Europe. So we're seeing a lot more interest in that region. But equally, it's one thing to if you like, to generate that interest. But you have, I mean, I'm very familiar with Kazakhstan. They are introducing a new mining code which will be in line with international best practice. But the fact of the matter is, there is still, I think many of these countries still carry a bit of a stigma with them through the the historic legacy of failed investments in those countries, and that generally does put a lot of investors off. They can still have the best mineral endowment known to man, but if at the end of the day somebody's not going to put their hand in their pocket and invest in these countries, that's slowing down any impetus there. So it's one thing, as John said, to identify those countries with, if you like, high sovereign risk, and I think we all know what that list is. But the fact of the matter, if you go to your investor on the street and say, okay, give me $200 million for a project in country X, they will have their own opinion on what they think is sovereign risk or not, because everybody wants to get returns. It's as simple as that.
I'm going to throw one word at you and just see how you react in terms of sovereign risk. Tanzania.
It has been very difficult in Tanzania. We like to think that there's a bit of light at the end of the tunnel. The president made some interesting claims and withheld VAT payments, for example, that were due back to mining companies. They've now paid a small amount of that VAT repayment back to Shanta Gold. It suggests that the country is perhaps returning to some normality from a taxation and mining perspective, and let's hope so.
So you think it's a temporary glitch in the path to prosperity?
I think, yes, let's hope it's very temporary. It seems to be moving that way.
Okay, we're running out of time. We talked several themes. We talked about management, we talked about sovereign risk, we talked about commodities. When it comes down to it at the end of the day, investors have to pick a stock. John, do you want to give us some ideas, give us some thoughts based on those themes?
Well, I've got two favourites at the moment. Georgian mining, which we've touched on Georgia, and Georgia is becoming more and more European. It's getting closer to the European Union and all that sort of stuff in terms of integration. And the other one is Blue Jay mining, which is up in Greenland, and Greenland is pretty first world. It's got a very, very small population, but it seems to be a very sensible country, and it is very supportive of what Blue Jay mining are doing with their titanium mineral sands project on the coast.
Phil, any thoughts from your perspective?
I'm not going to pick a stock, because that's not what we do as independent consultants. I'd just like to reiterate what I think you touched on right at the beginning, Charlie, is that to us, and we see this all the time, it's the management team of these new coasts particularly, which is absolutely critical to having success, because without that, many of these companies will founder. And I guess that's a longer term worry, is that moving down the track in 5, 10, 15 years, because we just look at the age profile of a typical management team within the mining industry now, it's probably 50 something, I'm guessing. There is a concern that moving on, that will be a problem, finding the right people to manage these projects, particularly as they get smaller and harder to develop. Therefore, there's going to be more projects requiring more teams of people to sort out.
Well, I'm afraid that's all we've got time for today, but we hope we brought you some food for thought, or food for mining, in this case on the very first day of the Mines and Money show, London's flagship show, the mining show throughout the year, which is on today in Islington, indeed, for the next couple of days. My thanks to my guests very much indeed, John Meyer, partner at the stockbroker SP Angel, and also Phil Newall, the managing director of Wardle Armstrong International. As I say, that's all we got time for, but we will be back, so don't go away in just a couple of minutes, where we'll be looking at more aspects of the mining industry generally, and we'll be speaking to, amongst others, Phil and I, in fact, will be speaking to Vitaly Nessis, the chief executive of Polymetal, one of the success stories of the London market. Don't go away, we'll see you in a moment.